Good morning and welcome to the Blue Line Metals Minute here for Friday, May 26th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Looking at the metals here today, we've got kind of the opposite picture of what we saw yesterday. So yesterday, just recap real quickly, we had a risk-on vibe here in the U.S. equity markets with stellar earnings out of NVDA. So that had put on some liquidation on the precious metals, some of the safety trades here. We saw money coming out of the bonds, out of the U.S. dollar, out of the gold market, chasing U.S. equities higher. Then you had some volatility type events. There was talk that there was some progress made on the debt ceiling that had liquidated that gold market off. That's where silver kind of punched that low there yesterday, below that $23. And then you had Fitch, they had put the US credit rating on watch. That took the market right back up. And then as the day went on, it just couldn't keep up with the chasing of the US equities, with the NASDAQ just having one of the best days on record. So a lot of momentum buying right there. Now today we've got an opposite picture. We've got your U.S. Treasuries, you got your 2-year, and I'm going to post that chart here. The 2-year right at about 4.51%. That has been the mirror image of the gold market. So that and the U.S. dollar. So U.S. dollar off here today, and the U.S. dollar's under some pressure because the British pound, that's your best performing currency overnight, and they had some stellar retail sales data. So they're going to be a little bit more hawkish over there. They're going to push that perhaps our interest rates a little bit higher based on the data that's coming out. And then we are going to have something in about 30 minutes. We'll have the core PCE data. That's going to cause some volatility as well. We want to see some softer data. Core PCE is basically the inflation that the normal consumer feels, things like you and I feel. So it's the basket of the goods that a normal person would buy, and they gauge the inflation on that. So it's none of this other funny business here where you got X autos, X energy, X this, that, whatever. So other markets here, you had crude oil down $3, not really any kind of news out there whatsoever. Today we got a small snapback on some buying. I think that it was a good opportunity yesterday, if you don't have any crude oil, to add some of that exposure. Go to the December contract as well. Grains across the board are all higher. I really think that wheat crop, I think that's going to be your sleeper trade here on the grains. I think it'll be one of your best performers. So weather-wise here, it's looking like hot and dry here for the next couple weeks as far as planting. And then a big move here, the copper market up about 2%. So that was a great move here. We've been slowly adding to the December contract. We think that ultimately one of your best performing commodities over the next like 12, 18 months is going to be that copper market, because the production cannot keep up with the demand as far as EVs, the electrification, and the improvements to the grid here. So other than that, you guys have a great weekend here. We probably won't do a video on Monday, but we might do one here if we see a little bit of movement, a little bit of volatility, or if they make any progress on the debt ceiling. Next week, we will have option expiration here for the June metals contracts, and that's about it here. So you guys have a great Memorial Day weekend. You need anything, give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.